please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Straight to the top story this evening, the 15th Finance Commission has become a steamy affair with the southern states on a warpath. The most contentious issue is on the terms of reference of the Commission that states that the devolution of funds will be made on the basis of 2011 census. Now, the southern states, barring Tamil Nadu, are irked because the total share of the southern states in country's population has fallen from 22% in 1971 to 18% by 2011. Now, the Prime Minister today specifically defended the terms of reference, saying that the government has asked the Commission to incentivize states that have worked to control population. I beg your pardon. Take a look.
A baseless allegation is being made about the terms of reference of the 15th Finance Commission. The Indian government has suggested to the Finance Commission to consider insensitivizing states who have worked on population control. By this yardstick, a state like Tamil Nadu, which has devoted a lot of effort, energy and resources towards population control, would certainly benefit.
91% of the total award of the Finance Commission is on the basis of tax devolution.
Okay.
And the entire this 91% is based upon 2011 population.
Okay.
While the incentives that the PM is speaking about are 9 in number, and at most the allocation would be, say, 2 to 3% of the total award of the Finance Commission.
Okay.
If you go by the earlier awards.
Okay.
And therefore, it can never, even in the distant dream, compensate for the loss that is made in the tax devolution.
Well, that's clearly one story that will continue to simmer, and clearly the last word is yet to be said. But let's move on to the other big development this evening. The Bank Board Bureau, led by former Comptroller and Auditor General Vinod Rai, has now been recast. The 4-member body was formed in 2016 to improve the performance of public sector banks. Now, the new chairman will be Bhanu Pratap Sharma. He was the former secretary at the Department of Personnel and Training. The 3 members in the committee will be Vedika Bhandarkar, who was a former executive at Credit Suisse India, Pradeep Kumar, a former managing director at the State Bank of India, and Pradeep Shah, the founder and managing director of rating agency CRISIL. We spoke to the Financial Services Secretary Rajiv Kumar. He assured us that the government will keep itself at an arm's length when it comes to appointment in public sector banks. We also caught up exclusively with Pradeep Shah, one of the bank's board bureau's newly appointed members. He believes that PSU bank chiefs should be given a tenure of at least 5 years, as it gives them more time to turn things around. Take a look.
The selection away from the government, in which government doesn't have a say. It's only the expert body, which is BVB, does it. So this is in continuation of that, and it's a renewed commitment. And it has generally been in the entire HR space of the government of India that no interference is there in from the government side, and it's essentially the merit in the entire landscape of the HR. The banking board bureaus, all recommendations essentially earlier also related to the HR related things. And the last BBB mandate also gives them a mandate of suggesting on the capital side of the banking. So that within the mandate, as is the existing mandate of the BBB, this will be working.
There are brilliant people in the public sector banks, and now the attempt has to be to get them to perform and give the results that, and avoid the results that we've seen in some of the public sector banks. Too short a tenure does not do justice to that person nor to the bank. So I think I would prefer 5 years is, of course, better than the 2 years and 3 years that we have seen in the past.
Well, a lot there on the new chairman's plate as he takes charge. But let's shift focus now to some macroeconomic data. The retail inflation cooled off in the month of March, coming in at 4.28% on the back of a dip in vegetable and other food prices. Lata Venkatesh is here to take us through the details of the inflation data. Lata, while inflation has cooled off, it still remains below market expectations. How are you reading the data?
Well, it is a mixed set of data. The fact that it's come in at 4.28 is better than what the Reserve Bank had prepared as earlier in the year, probably 5.1. They recently scaled it down to 4.5. This number is even lower than that. So to that extent, it shouldn't be treated as bad news. But the irksome part is that the market was expecting 4.2. So 4.28 will be a bit of a jar. More importantly, the contents. While food inflation has definitely come down, it's all of 2.8% compared to 3.2% even last month, that is February. What's worrisome is the non-food, non-fuel inflation. That's called core inflation. Largely refers to services, which is the steady part of the CPI basket. That's grown by 5.37% compared to 5.17% in the month of February. So you could crib a little, but overall, the inflation sentiment will be determined more by where crude prices head. So this perhaps will be an hour's dismay for the market, won't be a very troublesome number to swallow.
Right, so not a very troublesome number there. But Lata, stay with us. The other indicator that, of course, the markets will be eyeing, the index of industrial production, has also managed to maintain its momentum, coming in at 7.1% for February, making it the third straight month that the number has been above the 7% levels. What do you make of these numbers coming in? 3 straight months above 7%.
Absolutely. I mean, that's where the hope is. Growth is definitely ticking higher. Actually, the turnaround has come almost since the month of August. We have seen the month-on-month inflation number, month-on-month industrial output number improving. And the last 3 numbers have been particularly good with a 7% growth. We must remember that they had the advantage of a low base as well, especially December and January. They were demonetization months, year-ago base. But by the time we come to February, things had picked up a bit. Even then, 7% is a happy number. The very poor base, of course, is an additional support. But the internals of the industrial output number give you some cause for greater joy. The capital goods number has come in at 20%. And I think it's the 3rd or 4th month that we have seen double-digit growth. I think from November, we are seeing double-digit growth in capital goods. That's a little heartening. Again, a low base, but still, nevertheless, that's heartening. As well as consumption goods, both consumer durables and non-durables have come around 7.5% each. Both those are encouraging numbers. The only thing is, if you looked at the April-February number, that is the year-to-date number, then the industrial growth number is only 4.3%. So it's just the last 3 months that look very good because of the base. That's, calling the glass half empty.
Right, Lata, thanks a lot for that. So clearly the numbers look encouraging, but let's also keep in mind the low base effect there. On to the other big story now. Former RBI Governor Raghuram Rajan has reiterated his reservations on the government's demonetization move yet again. Speaking at an event at the Harvard Kennedy School yesterday, Rajan stressed that the government's decision to ban old 500 and 1,000 rupee notes on the 8th of November 2016 was not a well-planned, well-thought-out and a useful exercise. He said that any economist would suggest that if 87% of the currency is being demobilized, new notes must be printed. Rajan also reacted at the mega fraud at the Punjab National Bank. He said that the Indian banking systems are not adequate to prevent rogue dealers and rogue employees from colluding. Take a look.
Any macroeconomist or monetary economist would say when you're demonetizing 87.5% of the currency, better make sure you've printed 87.5% or pretty much close to that. India went into it without having done that. So it had a negative economic impact, but also the idea was that somehow people who had money stored in their basements without having paid taxes on it would sort of overnight see religion come to the government and say, sorry, we were hiding this stuff, let me pay taxes on it. That was the, to some extent, naive view. Essentially, all the money that was demonetized came back into the system, and it didn't have the direct effect that was sought, that a lot of people would fess up and pay taxes. we don't need to be really clever in the Indian system to make away with $1 billion. That the old sort of, that some of these banks have antiquated systems also. And that's the other worry, that, I mean, some of it was cyber-related, this latest Punjab National Bank scandal. We need to go into the details of that. But your worry is that the systems are not adequate to prevent rogue dealers, rogue employees colluding and making off with stuff. So that's the fraud part.
Well, that'll be a hard pill to swallow. Raghuram Rajan there clarifying that he believes in his assessment the systems are just not adequate. Let's move ahead now. Following rumors of a possible deal between Ola and Uber India, we learned from sources that Uber's global CEO, Barney Harford, will be making his maiden visit to India next week. In fact, CNBC TV18's Priya Seth has those exclusive details. Priya, what's the agenda of this visit and what's the significance?
Well, absolutely. Following the visit of Dara Khosrowshahi, Uber's global CEO's visit to India in February 2018, we understand that Barney Harford, who's the COO of Uber, will be visiting India next week. Now, do remember that Uber's COO was appointed in January 2018. So, therefore, it will be the first time that he will be visiting India from Uber. In fact, we understand that the focus of his visit is going to be on key issues around the key business metrics as well as a strategy to boost business in India. Now, do remember that the Uber CEO will also be meeting several state as well as central government officials to discuss business development plans as far as Indian market is concerned. He's also likely to meet several investors to discuss the road ahead for Uber in India. Now, do remember that a COO is usually a strategies man, so therefore he will be looking at several aspects of the Indian market, and he will communicate the same to employees in a town hall that is likely to be also held between April 17th to 20th next week. Now, also this this visit to India comes at a time when there are rumors about Ola and Uber India merging, or a deal that's likely between them. Of course, perhaps we can't link the two, but of course it is interesting to note on the timeline of this visit. In fact, we did reach out to Uber India, and the company has confirmed his visit. They've said that India is one of the core markets for Uber globally, and Barney is looking forward to meeting business as well as government leaders in the country.
Right, Priya, thanks a lot for that. So clearly the timing here is suspect, Priya pointing out, with a lot of speculation and rumors there of a possible, perhaps, association between the two sides. That's Ola and Uber. On that note, let's slip into a very short break, but coming up, shares of Alok Industries tank in trade after lenders reject the resolution plan presented by Reliance Industries and JM Financial. More details on that story when we return. Well, a very good evening once again and welcome back. Straight to a CNBC TV18 exclusive. Alok Industries, one of the largest defaulters from the RBI's first insolvency list, may be heading into liquidation. In a surprising turn of events, CNBC TV18 learns that the lenders have rejected the resolution plan offered jointly by Reliance Industries and JM Financial Asset Reconstruction Company. Now, they were the only ones to bid. Ritu Singh, who broke that story with us, is here. Ritu, just to get a sense, the only resolution plan on offer gets rejected by the lenders. What's in store now for Alok as well as for the bankers?
That's right. We understand from sources that the Committee of Creditors for Alok Industries has rejected the proposal offered by Reliance Industries together with JM Financial ARC in the meeting that concluded this morning at 10 a.m. We understand that the sole bidder in this case, which is Reliance and JM Financial, failed to secure the requisite 75% voting mark required for any resolution plan to be passed under Insolvency and Bankruptcy Code. Only 70% of the voters, of the lenders, we understand, voted in favor of the proposal, whereas 30% dissented, saying that their 4,800 crore rupee offer for Alok Industries was too close to the liquidation value of the company, which is pegged at around 4,200 crore rupees. Now remember, Alok Industries is facing claims of over 29,400 crore rupees, and it is likely that the company will head into liquidation because the 270-day deadline under IBC for Alok Industries ends in just a couple of days from now. So it will be a big hit or a big haircut that the lenders will have to take.
Well, thanks a lot for that, Ritu. And a standard disclaimer on your screens, Reliance Industries owns Network 18, which in turn owns CNBC TV 18, the channel that you're watching. Well, on to news just coming in. As you can see on your screen, debt-ridden Fortis Healthcare now has 3 suitors, with the Hero Enterprises Investment Office and the Berman family entering the fray. Remember, Manipal Hospitals, backed by the private equity player TPG, were the first ones to express interest. Now, even as that consortium is working on sweetening the deal, there was an unsolicited offer from Malaysian hospital chain IHH. Nisha Podar now joins us with more details. Now, Nisha, this is the latest offer coming in from the Munjals and from the Berman family. The race is only heating up, and what's interesting that it seems to come at a time when concerns were being expressed on the valuation of the Manipal deal. So what details are you picking up, Nisha?
So while Manipal transaction has been sweetened and IHH has given a non-binding offer, this one is coming in as a bit of a surprise right now, which is the unsolicited binding offer that has been given by Hero Enterprise Investment Office and Berman Family Office. And what they have offered is not a buyout of Fortis Healthcare. It is 1,250 crore rupees via preferential allotment route is what they have offered to pay, and that too in 2 tranches, remember. The immediate investment will be only of 500 crore rupees, and 750 crore rupees will be post due diligence, which will be some time away. So definitely this is not a buyout offer, but an interim financial investment, definitely. Now, with the entire 1,250 odd crore rupees, the total holding of Berman and Hero family would be about 16%, and I do gather that Berman families already got an investment of 3 to 4% holding in Fortis Healthcare. So they've already been invested in Fortis Healthcare, and in the interim, they are looking at buying out some stake through a preferential allotment while the race is on for a buyout of the company. So we do not know the seriousness of these new bidders, whether it is for buying out the company or they want to make an interim quick buck in the eventuality of a deal of Fortis Healthcare sometime in future. I also gather from sources that Fortis Healthcare has an immediate repayment of their debt over the next 2 quarters of about 1,000 odd crore rupees. So if the deal is really taking some time, then this particular investment may come in as a lease of life for Fortis Healthcare in dealing with their debt situation and the debt repayment as well. So these are the initial details that I'm gathering at this point, but definitely this particular case is really looking very, very interesting, and it will be upon the board and the shareholders of Fortis Healthcare to really take a call on this. But also remember that with Hero and Berman doing this transaction, it could become the single largest shareholder in Fortis Healthcare in the absence of a promoter shareholding.
Right, Nisha. So clearly the race is wide open now, and as you can see on your screens, Fortis there issuing a statement that the offers are currently under evaluation. Let's move ahead. CNBC TV 18 exclusively learns that oil marketing companies may have absorbed under-recoveries worth 500 crore rupees on fuel in financial year 18. Now, under-recovery is a term used in the Indian petroleum sector to denote the notional losses that oil companies incur from sale of fuels at a discount to the cost price. Also, since fuel prices in India are deregulated, the government is unlikely to compensate the OMCs for their losses. Sapna Das now joins us. Sapna, the big question being asked is, if fuel prices are determined by market forces, why the under-recoveries?
We have been given to understand very clearly that ending FY18, oil marketing companies actually have incurred under-recoveries, quote-unquote, or rather losses to the tune of 500 crores. Now, this may come as a bit of a surprise in many quarters because both the products are clearly deregulated, and there's no question of any government compensation to OMCs on petrol and diesel. But this is what we have been given to understand. 500 crores could be the under-recoveries on petrol and diesel ending FY18. Now, one of the reasons that may be possible behind this development is the fact that during the state election season, OMCs have probably not passed on higher prices to consumers. Now, the government, of course, is clearly clearly and categorically denied that there has never been any instruction or signal to OMCs to pass on higher prices. But we are also given to understand that during the recent price changes that were going on in the retail market, OMCs were trying to cover this 500 crores. Apart from this, the other thing that we have also been given to understand is that, especially if you take the example of Delhi, here the retail prices should not go beyond 75 rupees a litre. It's hovering around 74. Petrol prices are hovering around 74. So that could also be an informal signal that has come in from the government quarters. At least the sense that I have gathered is that, yes, there has been some movement in terms of asking OMCs to move their prices in a narrow band and to calibrate any kind of a price rise that they're passing on to consumers.
Well, thanks, Sapna, for that. Now, the government is trying to soften the angel tax blow, and today the centre has notified the exemption mechanism for startups. DIPP Secretary Ramesh Abhishek has said that this relief will be extended to companies registered prior to the 1st of April 2016 as well. Now, also the Interministerial Board will have time-bound targets for providing exemptions. Rituparna Bhuyan joins us with more on the notification and the clarifications coming in from the DIPP Secretary. Ritu, take us through the details.
In our show on Young Turks, a lot of startups and angel investors raised queries, which I passed on to the DIPP Secretary Ramesh Abhishek, and he answered he answered all the queries point by point. Let me take them one by one. Firstly, he has said that all startups, even those incorporated before 1st of April 2016, can seek exemption from Section 56 of the IT Act from the IMB. That is one. Secondly, as far as the IMB is concerned, it will work with time-bound targets for both Section 80 ISC related tax benefits as well as Section 56 of the IT Act related exemptions. The online application form for both the exemptions will be set up in the next 7 to 10 days. And once IMB certifies a startup for Section 56, it can bring in multiple round of investments up to a limit of rupees 10 crore. Also, we have been told by the DIPP Secretary that the CBDT notification will come out shortly regarding this. And even if there is a tax notice which a startup got, such startups can approach the IMB for Section 56 related exemptions, provided that the certification is provided that the assessment is still open. Last but not the least, regarding the valuation of the startups, well, on that the DIPP Secretary said that the startups themselves suggested a mechanism, that is to use merchant bankers to have valuation regarding the startups. He said that the DIPP will not be looking at or will not be formulating or suggesting valuations regarding the startup deals. It will be looking at what the merchant bankers will be saying. And last but not the least, the DIPP Secretary also clarified that this 10 crore limit has been put because most startups in most startup transactions, according to a study done by DIPP, that is the highest that they have seen as far as angel investments are concerned. With that, it's back to you.
Well, thanks a lot for that, Ritu. Let's shift focus now onto a quick wrap from the Commonwealth Games. India has managed to add 2 more gold medals to its kitty. Wrestler Sushil Kumar dominated in the final to win 10-0 and finish the match in just 80 seconds. Meanwhile, wrestler Rahul Avare won India's second gold of the day in the 57 kg category. Babita Kumari, meanwhile, got silver in wrestling in the 53 kg category. India's women hockey team, meanwhile, lost to Australia in the semi-finals to set up a clash for the bronze medal with England. Well, with that, it's a wrap on this edition of What's Hot. But up next, the Lal Street continues its winning streak, second day in a row, as both the Nifty and the Sensex rallied 0.5% each. All that market action only on Markets Today. Talk back right after this short break.